Hello, dear students. Hope you are doing well and going strong uh, under the present circumstances. So, this is video number 2 of class 3 dealing with heads of income. In the last class, we discussed income from business or profession. That is, we were going through heads of income under section 20. So if we recall, under section 20 there are 7 heads of income. Today we'll discuss 2 other heads of income, that is income from capital gain and income from other sources. So hope you are ready to go. We are ready to go. Let's go. Today's topic is income from capital gain, section 31 and 32 of the Income Tax Ordinance, section 31 and 32 of the Income Tax Ordinance deal with the taxation of capital gains. Now, what is, before discussing section 31 and 32, let me discuss generally with you that capital gain means gain which you derive by disposing of capital assets. Again, if I repeat, capital gain is a gain which you derive by disposing of capital asset. So the important thing is that there is capital gain if there is any disposal of capital asset. So you have to understand the very term capital asset, because when you dispose of capital asset, then you derive capital gain. So first of all, what we have to know is to understand what is capital asset. Capital asset is defined in section 2 clause 1515 of the Income Tax Ordinance 1984. Let's see what is the definition of capital asset. As I said, section 2 clause 15, capital asset, it says that capital asset means property of any kind held by an assessee, whether or not connected with his business or profession, but does not include. So capital asset, the definition says capital asset means any asset or any property held by the assessee. And this is important. This asset or property might be connected with the business or might not be connected with the business. But it says that it excludes, the definition of capital asset excludes certain things. For example, it says that, but does not include any stock in trade, not being stocks and shares. The definition of capital asset does not include stock in trade. Stock in trade, is not capital asset, because stock in trade is the stock for the business that you deal in. For example, you have got 100 pieces of electric fan in your store ready to sell. So this is not the capital asset, but this is the stock in trade, and this does not come within the purview of the capital definition of capital asset. But stocks and shares, for example, if you have some shares of any company listed with the stock exchange, Dhaka DSE Dhaka Stock Exchange, then in that case the stocks and shares, obviously they are capital assets. Consumable stores or raw materials held for the purpose of business or profession. Consumable stores and raw materials to manufacture things or products, then they are not the capital asset. Personal effects, that is to say movable property including wearing apparel, jewelry, furniture, fixture, equipment, vehicles which are held exclusively for personal use by and are not used for the purpose of business or profession of the assessee or member of his family or dependent. So if you have any furniture, fixture, fittings, jewelry, etc., 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 and those are not used for your business purpose, then in that case these are not considered as capital asset under section 2 clause 15. So for example, I have a watch. So this watch is not I use that watch personally to count time, so this is not the this for personal use, so this is not the capital asset. So I use fan, electric fan at my home, so for personal use that is not capital asset, and this is not connected with, this is not used for my business purpose. But remember, I have a laptop, I use that for my personal use, so this laptop is not considered as capital asset under section 2 clause 15. But if the laptop is used for any business premise, for any business purpose, in that case obviously and definitely that laptop will be considered as a capital asset under the definition of capital asset under clause section 2 clause 1(5). So here's the definition of capital asset. So again, capital income from capital gain is one of the 7 heads of income. You get capital gain by disposing of the capital assets, and capital asset is defined in section 2 clause 15. If you derive any capital gain, then as per section 31 and 32, you have to pay tax on that capital gain. For example, section 31 says tax shall be payable by an assessee under the head capital gains in respect of any profits and gains arising from the transfer of a capital asset, and such profits and gains shall be deemed to be the income of the income year in which the transfer took place. Easy and simple. Please go to. Now, section 32 says computation of capital gains. Section 32 says the income under the head capital gains shall be computed after making the following deduction from the full value of the consideration received or accruing from the transfer of the capital asset or the fair market value thereof, whichever is higher, namely any expenditure incurred solely in connection with the transfer of the capital asset. So if you incur any expenses while disposing of, and that expenses is related to the transfer or disposal of the capital asset, then that expenses will be deducted from the capital gain. The cost of acquisition of the capital asset and any capital expenditure incurred for the improvements thereof, but excluding any expenditure in respect of which any allowance is admissible under any provision section 23, 29 and 34. So what it says basically is that if you acquire the capital asset, and the cost of acquisition should be adjusted, should be deducted from the capital gain. For example, you buy a piece of land, so for example 500,000 taka, you sell the land by 10 lakhs taka, for 10 lakhs taka, then 500,000 taka is your cost of acquisition, so that 500,000 taka will be deducted from 10 lakhs, which is your gross capital gain income. So cost of acquisition, cost of what is, sometimes it becomes a problem for the students or for the taxpayer to understand what is the cost of acquisition. It is simple. What is the cost of acquisition? Whenever you buy something, that is the cost of acquisition. So you buy something for, as I gave you the example, if you buy something for 500,000 taka, that 500,000 taka is the cost of acquisition. Now sometimes as it says that where it was acquired by the assessee by purchase, the actual cost of acquisition, and when it became property of the assessee under a deed of gift, bequest or will, or under a transfer of a revocable or irrevocable trust, or on any distribution of capital assets on the liquidation of a company, or any distribution of capital assets on the dissolution of a firm or other association of persons, or the partition of the Hindu undivided family, the actual cost of acquisition to the previous owner of the capital asset as reduced by the amount of depreciation, if any, allowed to the previous owner, and where the actual cost of acquisition to the previous owner cannot be ascertained, the fair market value at the date on which the capital asset became the property of the previous owner. So what it says is that if you do not purchase directly the capital asset, then you get it from somebody else. For example, you inherit it, you get it from the company. So then in that case, the cost of acquisition by the previous owner should be considered as the cost of acquisition. But if the cost of acquisition by the previous owner it cannot be ascertained, then the actual market value at the time when it became the property of the actual owner should be considered as the cost of acquisition. So that's income from capital gain. I just summarized. Income from capital gain is taxable under section 31. Capital gain arises through the transfer of capital assets. Capital asset is defined in section 2 clause 15, and section 32 says how to compute capital gain and what is cost of acquisition. So here we finish income from capital gain. Now we have the last head of income, that is called income from, got that? That is income from other sources. So we have got 7 heads of income under section 20. The last head of income is the income from other source, which includes so many things. So we'll see, and that is dealt with in by section 33 and 34. Section 33 says income from other sources. 33 says what are the items that to be considered as income from other sources. Income from other sources, the following income of an SSC, section 33 says, the following income of an SSC shall be classified and computed under the head income from other sources, namely dividend and interest. So it's simple. If you get any dividend from against your share, and if you get any interest thereof, then that is considered as income from other sources. Interest is, for example, I have a savings account with the Shunari Bank. So at the end of the year, I get some interest on that accrued to that account. So for example, 1,500 taka interest accrued to my savings account. So that interest is considered, according to the definition of section 33, the interest I receive from that bank account, it is called income from other sources. Royalties and fees for technical services. You know, royalty is given to a person for the use of his copyright. So for example, a singer sings, a lyricist writes songs. So what he gets in exchange, that is called the royalties. And somebody invents something, and that he lets others use, that is, and he gets something in exchange, that is royalty, that is income from others. Than the fees for technical services. Technical services, you know, services which are rendered by technical persons to some people, and the fee is being received by the technical person is considered as technical fees for technical services, and that is considered as income from other sources. Income from letting of machinery, plants, or furniture belonging to an SSC, and also of buildings belonging to him if the letting of building is inseparable from the letting of the machinery, plant, or furniture. If you let out machines, furniture, fixture, fittings, then that is considered as income from other sources. And now 33D says any income to which section 19, 1, 2, 3, 4, 5, 8, 9, 10, 11, 12, 13, 21, 21A, 21B, 24, 26, 27, 20, 29, and 31 applies. So here we discuss a little bit about what is that. Section 33, to identify the items of income from other sources, it refers to, as you know, it says dividend, interest, etc., technical service fee, etc., etc., but it refers again to section 19 of the income tax ordinance to find out the income, items of income from other sources. So it says that what are the income from other sources? As mentioned in section 19, there's a lot of subsections in section 19. So it says that income as mentioned in section 19 subsection 1, 2, 3, 4, 5, 8, 9, 10, 11, 12, 13, 21, 21A, 21B, 24, 26, 27, 28, 29, and 31. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So 20 items have been referred in section 19, starting from subsection 1. Those items are income from other sources. So for that, we have to go back to section 19. Now, one important issue is that, as maybe I discussed in the earlier classes, that section 19 of the income tax ordinance is a deeming section. Now, what is a deeming section? Deeming section is a section which deems something. For example, the taxpayer says this is not the income, but deeming section, section 19 says, yes, this is your income. For example, you earned 500,000 taka last year, but you spent 600,000 taka. So you spent 100,000 taka or more of your income. So this 100,000 taka, the Deputy Commissioner of Taxes or the income tax officer will ask you, you earned 500,000 taka, but you spent 600,000 taka. It means that you spent additional 100,000 taka than your income. Now, where did you get this income from, 100,000 taka from? If you cannot explain, or you give an explanation and the explanation is not satisfactory to the Deputy Commissioner of Taxes, then this 100,000 taka will be deemed to be your income, and that income will be put under the head income from other sources. So because you say this is not your income, but law says, law deems that this is your income. Now we'll go to section 19 casually. Not all the items should be discussed. Some of the items I'll discuss with you, and the rest of the items you just go through. If you don't understand or cannot make any sense of those, then you just drop me some lines, so I'll be able to clarify the issues to you through my Facebook. As I mentioned earlier, I've got a Facebook for you, Shams Ahmed Facebook group. Maybe we can meet sometimes through Google Meet, or conveniently through Zoom, Zoom meeting. I've got Zoom downloaded, so if I can get the email of yours, all of you, so we can arrange a time, meeting time, and we can log on and we can discuss issues necessary for you to be clarified to you. Now let's discuss items of income from other sources as mentioned in section 19. So it starts from section 19.1. So section 19.1 says, the caption of section 19 says, unexplained investments, etc. deemed to be income. So the very title or caption of section 19 says deemed to be income. So there is no doubt that this section 19 is a deeming section. So now let's start from section 19.1. Section 19 subsection 1 says, where any sum is found credited in the books of an assessee maintained for any income year, and the assessee offers no explanation for that, then the unexplained credited amounts will be considered as income from other sources. For example, you are a businessman, so you maintain books of accounts. So there is an amount credited in your books of accounts which you cannot explain to the Deputy Commissioner of Taxes. So if you cannot explain that to the Deputy Commissioner of Taxes, or you give an explanation but that is not satisfactory to the Deputy Commissioner of Taxes, then this amount will be considered as income from other sources. That is 19.1. 19.2, wherein an income year the SSC has made investments or is found to be the owner of any bullion, jewelry, or other valuable article, and the Deputy Commissioner of Taxes finds that the amount expended on making such investments or acquiring such bullion, jewelry, or other valuable articles exceeds the amount recorded in this behalf in the books of accounts maintained by the SSC for any source of income, that will be considered as an income from others. So for example, whenever you submit your income tax return I'll discuss another time, or I'll show you, and you can get it from the net if you log on to National Board of Revenue website. So if you submit income tax return, with the return you have to submit wealth statement, that is called IT10B series. So I repeat, whenever you submit income tax return, along with the income tax return you submit your wealth statement. It is called statement of assets and liabilities. It means that the statement which contains what you have as your asset and what are the liabilities you have. So that IT10B wealth statement contains all the information regarding your holdings of assets and other liabilities. So the Deputy Commissioner finds that you have got one apartment in Gulshan, or say you have got some gold in your wealth statement. You showed 10 worries of gold in your wealth statement, but in fact you have purchased 20 worries of gold. So that 10 worries extra, which is not recorded in the wealth statement, will be considered as your income from other sources. 19.3 says, example I've given you, that you have earned 500,000 taka, but you have spent, how much you have spent? 600,000 taka. So excess 100,000 taka, if you cannot explain, that will be considered as your income from other sources. That is section 19 subsection 3. Now section 19.4 says, wherein the financial year immediately preceding the assessment year the SSC has made investments which are not recorded in the books of accounts. So section 19.2 and 19 subsection section 19 subsection 2 and section 19 subsection 4. These two sections are similar, but there is a difference between subsection 2 and subsection 4. Subsection 2 says you have shown some properties, but you have more properties than that. And section 19 subsection 4 says you have not shown any property. You have property, you have gold, you have money, you have buildings, you have other properties, but you have not shown any wealth statement. So in this case, if the Deputy Commissioner can detect those properties, then he will ask you the question to explain. If you cannot explain, or you give explanation which is not satisfactory to the Deputy Commissioner of Taxes, in that case, that unexplained and unrecorded investment. So section 19 subsection 2 is the recorded investment is recorded, but some portion is not shown. And in section 19 subsection 4 it says that no, you have made investment, but it has not yet been shown in your wealth statement. So under the circumstances, it will be considered as your income from other sources. So I have discussed section 19.1, that is known as cash credit. 19.2, investment recorded partly, but you have excess investment. Section 19.3, you have spent money over your income, that is unexplained, you have got unexplained expenditure. And 19.4, which is that you have not recorded your investment, and the Deputy Commissioner detects that you have got some investment, you cannot explain, or you give explanation which is not satisfactory to the Deputy Commissioner of Taxes. So that will be considered as your income from other source. So verses 33 says, that section 19 subsection 1, 33 subsection 19.1, let's go back, 19.1, 2, 3, 4. We have discussed up to 4, now 5. Section 19 subsection 5. Sorry for that. Okay. What subsection 5 says? While in the financial year immediately preceding the assessment year, the assessee is found to be the owner of any money, bullion, jewelry, or other valuable article which is not recorded in the books of accounts, if any, maintained by him for the source, and the assessee offers no explanation about the nature and source of the fund of the acquisition of the money, bullion, jewelry, or the valuable article, or the explanation of what is not in the opinion of the Deputy Commissioner of Taxes is not satisfactory. So what it says that in the financial year immediately preceding, you own money, you own bullion, you own jewelry or other valuable article. So this is the movable property. This is section 19.5 says you have some movable properties, but you haven't shown in the wealth statement or 10B. So that will be considered as your income from other sources. That is section 19 subsection 5. Now section 19 subsection 8 says, what subsection 8 says? Let's discuss subsection 8. Subsection 8 says where any asset not being stocks and shares or stocks and shares are purchased by an assessee from any company, and the Deputy Commissioner of Taxes has reason to believe that the price paid by the assessee is less than the fair market value, the difference between the price you paid and the fair market value shall be deemed to be income of the assessee classifiable under their income from other sources. This is very interesting. So I give you an example. So for example, you have purchased a car from the company. Sometimes it happens that company they buy cars and they sell those and purchase new one. So now you have purchased a car from a company. Now the purchase price, the price you pay to the company is much less than the fair market value. It means that if you want to buy this from other places, then you have to pay much higher prices. And if the Deputy Commissioner finds that, then the Deputy Commissioner will consider the fair market value, ignoring the price you have paid, and that fair market value and the difference between the price you have paid and the fair market value will be considered as your income from other sources. So please go through well section. If you go to now, you will understand section 19 subsection 8. Now what else? Section 19 subsection 9. What 9 says? Let's see what 9 says. Subsection 9 says when a lump sum amount is received or receivable by an assessee during an income year on account of salary or premium receipts by virtue of any lease, such as amount shall be deemed to be income of this income from other sources. For example, say you have a commercial building. Please note well, you have a commercial building. So what happens is that someone wants to take it for lease, but there is one system, particularly in old Dhaka or in old commercial cities and places, that you have to make one-time payment to the owner, which is known as salami. So you give him salam in terms of money. You give him some money, for example, a lump sum amount. For example, 5 lakhs, 10 lakhs, 20 lakhs. It depends on the value. It depends on the importance of the commercial area. So if you go to old Dhaka, so for example in Chowk Bazaar or somewhere else, and if you want to lease, say for example 5 feet to 10 feet shop, then maybe you have to pay 20 lakhs taka to the owner as salami. So that salami, it is considered under section 19, section 10, that 9, that salami is considered as your income from others, because this is one-time lump sum payment against your house and some other properties. Next is 1910. And section 1910 says that where an amount is received by an assessee during an income year by way of goodwill money or receipt in the nature of compensation or damages for the cancellation or termination of contracts and license by the government or any person, such amount shall be deemed to be income of such assessee for the income year classifiable under the income from other sources. Section 19 subsection 10. Let me give an explanation to that. For example, you are a contractor, the government, you have got a job from the government, a contract to build a bridge. So all of a sudden the government says that you are not required to build the bridge. I am cancelling the contract with you. In exchange, I am giving you some money. So that money which you are receiving from the government as a contractor, as a compensation against to cancellation of the contract, that is considered as your income from other sources. So that is subsection 19, subsection 10. Now subsection 11 says that where any benefit or advantage, whether convertible into money or not, is derived by necessity during income year on account of cancellation or of indebtedness, which makes the debtor taxable, the money value of such advantage or benefit shall be deemed to be his income for that income year, classifiable under that income from other sale. So it says that section 19, subsection 11 says, where any benefit or advantage, whether convertible into money or not, is derived by necessity during an income year on account of cancellation of indebtedness, the money value of such advantage or benefit shall be deemed to be his income from the income year, classifiable under the head income from other sources. So that is section 19, subsection 11. Now let's go. The next section, subsection 12 says, any managing agency commission, including compensation received during any income year by necessity for termination of agencies or any modification of the terms and conditions relating thereto, shall be deemed to be his income for this income year, classifiable under that income from others. So managing agency commission is considered as income from other sources. So that is section 19, subsection 12. Next one is subsection 13. It says, any amount received by an assessee during an income year by way of winnings from lotteries, crossword puzzles, card games, and other games. So if you win a lottery, for example, if you win a lottery, and that the winning from lottery, the money you win from lottery is considered as your income from other sources. So there is some other items, for example, section 19, subsection 21. 21 says, where any sum or aggregate of sums not exceeding Taka 5 lakhs is claimed or shown to have been received as loan by an assessee not being a company during an income year from any person not being a banking company or financial institution, otherwise than by a crossed check drawn on a bank or etc., and has not been paid in full within 3 years from the end of the income year in which it is claimed or shown to have been received, the said sum or part thereof which has not been paid back shall be deemed to be the income of the assessee as income from others. This I give you explanation. For example, you take money from someone, aggregate of sum not exceeding Taka 5 lakhs. So you take from your friend or from an individual, you take money not by a bank check or not from a bank, and you don't pay the money back to that person for the next 3 years. So you take the money as loan this year, but you don't pay it next year, the year after, and the year after. For 3 years you don't pay that. So if you don't pay that and it is found that you still owe that money to the other person, then this will be considered as your income from other sources. So there are some other items. For example, we have discussed up to 1921. There are some other items, 21A, B. Please go through those items. If you do not understand, I think they are self-explanatory. If you do not understand those, please let me know which one you don't understand. So I'll explain. I'll give an explanation through my Facebook group in some other manner. So by doing that, by saying so, here I conclude the lecture on the income, on the heads of income. So we have, if I wrap up, then we have seen for the income which is being taxable or on which tax is imposed, that income is classifiable under 7 heads of income. So those 7 heads of income are mentioned in section 20 of the Income Tax Ordinance 94, and we have discussed right from income from salary to income from other source. all 7 heads of income we have discussed. So for your midterm exam, income from salary and computation of perquisites is very important. And for final exam, among others, inter alia, income from business or profession, income from other sources, they are important. So I'll be back to you in class 4 with some other fascinating issues of the taxation laws and with some new videos. So until then, other things, I'll put some questions for multiple choice exams on the studio, Box Studio. So you have to give the exam, attempt the exam. The number will be 15, 5 marks. So they will be uploaded in due course, and you have to appear in the exam in due time. So I wish you all the best for your study and exam, and I'll be back to you again in class 4 with some other issues. Until then, take care, stay safe, stay blessed. Goodbye. Take care. Thank you very much.